Hi everyone, and welcome to the 5th edition of the weekly Venture Scanner Roundtable. I'm Nader Ghaffari, your host and CEO of Venture Scanner. Before kicking off, I wanted to share some exciting news. Just last night, we unbundled our product. It's a release we've been working on for some time now, which means that you, the audience, and our customers can have access to our intelligence and our scans on a per sector basis. This means you can show up and pick a sector like Internet of Things or Bitcoin and simply subscribe to the sectors that interest you. These are free for 30 days, and after the trial period, they're only $99 per month. So we're looking forward to having all of you try that and give us your feedback. Now back to our roundtable. Just a reminder, what we do here at Venture Scanner is cover emerging technology sectors. And the goal of this roundtable is to go around the room to each sector analyst who will provide an insight which they have uncovered over the last week, and we'll do some casual conversations and hopefully share some actionable insights for you, whether you're a corporate or an investor. So with that, let's go ahead and kick this off with Nate Pacer, who covers connected transportation and Bitcoin.
Thank you very much. Today we're going to talk about connected transportation and the purchase of an Italian telematics company called Cobra by the large telco Vodafone for around 150 million euros, which is basically $190 million. This is a relatively, obviously, large acquisition, and the main reason they were doing that is that the telcos know that moving forward, the car is going to be a whole new mobile data device, kind of like a cell phone, and they're going to have to be playing strongly in that market. So this is a way for them to jump into an existing market, learn the trade, and then to slowly grow with the rest of the industry as car telematics and the car in your cloud, the smart car, moves forward.
Nate, is this a sort of the first of the kind we've seen, or have we seen other sort of incumbents and established players out there enter into this sector through other M&As?
This definitely isn't the first. This is probably one of the larger ones that I seem to recall. Another acquisition that happened recently, sort of a telematics company, was for $600 million, which was larger in a Brazilian case, but that was actually from a tire manufacturer. So the desire there is maybe more for just market penetration for tire sales. But in general, I think there's a growing recognition among telcos that they're going to need to be the guys who move the bits from the car into the cloud, and either they'll do it through your cell phone. So they're already sort of doing that service, or they'll do it, through some sort of OEM device in the car itself. So, for example, people like Tesla are signing a bunch of data agreements in each country to use the local telco. So this is probably part of an ongoing trend, but this is maybe one of the larger moves and sort of a very specific move from a telco to sort of learn telematics by buying a company, as opposed to just partnering with them.
Right, because usually they would just partner and power the data piece of these telematics companies, but they're actually going in and taking ownership of the software and the hardware.
That's correct. That's correct.
Interesting. Great. Let's move on. We'll go to Masami Kato, who covers the Internet of Things. Over to you, Masami.
All right. So I think similar to cars, I think the big news this week in IoT was the acquisition of DropCam, the Wi-Fi security camera from the home, by Nest for $555 million, if I remember correctly. So Nest was acquired by Google for $3.2 billion earlier this year, and they spent $500 million of that to buy a Wi-Fi camera. So it's obviously going to start connecting the devices in the background and start sharing data. Oh, by the way, Google has, DropCam has, the Nest person has commented that the DropCam will fall under the privacy policy of Nest, not Google. So data will not be exposed to Google, at least for now, unless there's a specific requirement opt-in by the consumer. So we're seeing a lot of hardware purchases this year. We saw the Nest case, we saw the Beat case, and we also a couple of robotics companies. So it seems as though that if these IoT companies can get their initial growth, get some installment base into the customer's home, they're going to be a very lucrative target for acquisitions. And as people said, these machines could be Trojan horse. Once you have these devices in the home or in the car, you've got a lot of options to start new services. So that's IoT this week.
Do we have any sense on Masami, on how Dropcam and Nest plan on integrating or working together in any capacity?
Well, they haven't mentioned anything specific yet, but you can always speculate. So right now, Nest has two devices. They have the thermostat and the smoke detector, carbon monoxide detector, and those two devices do work together. For instance, if carbon monoxide is detected in the home, Nest thermostat can turn the furnace off, which is the likely cause of carbon monoxide. So if you add the security aspect to it, and this is just thinking from out of the air, but say if the Nest device knows that you're not home, there's a feature called auto away, and a camera detects something in your yard, it could really aggressively send a notification or alarm to the user. Otherwise, if the system knows you're home, it will just maybe send you a very nice, gentle reminder. So something like that is one possibility, but I'm sure folks at Nest have a lot of things brewing in their minds.
Yeah, it'll be it certainly will be interesting to watch. And Jeremy Monto, our CTO and co-founder, he's actually over at the Google I/O Developer Forum that's going on this week, and I'm curious to see what kind of announcements we're going to see over there from Google on the connected home and some of these products that they've acquired and are putting under the same umbrella.
Definitely, yeah. Similar to the Home Kit, the Health Kit. I'm sure Google will be announcing something similar. At least a rumor has it that they'll be announcing it. So, it'll be exciting times going forward.
Awesome. Let's move on. We'll go over to Devin Christensen, who leads our digital health sector. Devin?
Thanks, Nader. Yeah, let's continue on the Google discussion front. As you mentioned, the Developer I/O conference is happening right now, and Google is rejoining the health party. They've launched their own health tracking platform called Google Fit, which will pull in and store data from third-party fitness wearables and health apps, and this really comes on on the heels of the launch of Apple's Health Kit and Samsung's SAMI health data platforms. Both of those happened within the past month. And additionally, I learned that Microsoft is now rumored to be considering a move into this space as well. So lots of activity for the tech big hitters here. Really the four horsemen of digital health data platforms. So I find this interesting on a couple of levels. One being some of you may remember the Google Fit, or I'm sorry, Google's ill-fated Google Health platform, which really didn't fly, mainly due to privacy concerns from the consumer side of things. So today, with the existence of these other platforms from both Google, Apple, and Samsung, there seems to be less concern about FDA regulation and health privacy, and really that's highlighted by these companies moving into that space. And then additionally, the regulatory environment is still evolving, so it'll be interesting to see how that plays out and if the market can support all these platforms, and additionally if those platforms will if there'll be any other regulatory issues with data privacy going forward.
Or even potentially some standardization across some of these platforms, that have to factor in HIPAA and some other regulatory, concerns that may bleed into them, right?
Yeah. Yep. Definitely.
Okay. Thanks, Devin. Let's move over to Wayne Wong. Wayne covers our financial technology sector. Over to you, Wayne.
Well, thanks, Nader. So one of the more talked about innovations in fintech is, disrupting the consumer banking space. So, we have startups that offer users a free bank account coupled with a free debit card and a mobile app, something like, like GoldBank's, mobile app experience. So what's interesting is in the past week, two German-based companies, Number 26 and Avuba, came out with announcements of new funding. Number 26 just raised $2 million from investors, including Axel Springer, Plug and Play, and Avuba just came off Techstars London. Now, what's interesting is in the U.S., across the pond, you have companies like Simple, which was acquired by BBVA for $117 million earlier this year. But a recent report by Quartz came out with a leaked memo indicating that the user growth at Simple isn't as high as expected, partly because of the application, know your customer approval rate, and decreasing approvals for due to the KYC regulation is impacting Simple's ability to scale. And for GoBank, if you actually download the GoBank app and sign up for an account, if you try to connect it to Venmo, for example, it's essentially you're notified that it's actually not a real bank account. In fact, it's actually a reloadable debit card. And if you use your phone to try and deposit a check, it actually takes 10 days for the check to clear. So there are all these nuances in the consumer banking innovation space that's preventing these apps from actually disrupting the industry as widely as it should be. So with Europe having a very different regulatory landscape, it will be very interesting to see how these two startups take on the fintech innovation in consumer banking.
Hey, Wayne, how do these products actually integrate with existing banks, or how does it work? Do the consumers just kind of go in and link up all their accounts, or is this something sort of separate?
Well, so a lot of this apps, they are not banks, in fact. So, for example, Simple is just a front-end, interface.
Right.
Yeah. For them, they actually partner with Bancorp, which is essentially a white label bank. And as mentioned just now for GoBank, a lot of these are reloadable prepaid cards, which it's nothing new. There have been a lot of reloadable prepaid cards targeted at the unbanked. Programs run by Amex and Green Dot, which is a parent company for GoBank. But the thing about Simple and GoBank is that it is marketed, it is positioned as a banking product and not as a reloadable prepaid card. So, for example, Simple, the banking partner is Bancorp. For GoBank, they actually acquired a bank, to actually have the acquire the banking licenses. And for Moven, I believe the partner is, if I'm not wrong, it is CBW Bank, I believe, which is a FDIC insured bank. So these apps definitely need to have a banking partner.
Yeah, so it's different than the predecessor products like the Mints of the world, which kind of integrated with your credit cards and your banks and everything, and you kind of got a snapshot, and then they delivered you, other benefits on top of that based on knowing you. These latest trends of companies actually come coupled with a bank. They want to kind of be the full service and move you off of your current existing banking partners to sort of, hey, come use this product. This is sort of a new bank, and it's got a consumer interface that is much more friendly, and it does a lot more for you, right?
Right. Yeah. So I mean, these apps do have sort of mint-like features. They have you track your expenses, budgeting, personal finance features. But you can also, for example, GoBank, they give you a free debit card that you can actually use to withdraw money from ATMs supported in their network. And companies like Moven eventually aim to provide loan products to the consumers by analyzing the consumers' social media activity, for example.
Interesting. Great. Thanks, Wayne. Let's finish off the roundtable with Nathan Suhu. Over to you, Nathan.
Thank you, Nutter. So a couple of big pieces of news this week. First, as most of you have probably already heard, Aereo lost its battle in the Supreme Court. The justices went with the broadcasters, saying that what they believe Aereo is doing is acting as a cable operator, therefore they are bound by the same copyright laws and permissions. So I thought that was pretty interesting. I scanned a bunch of articles. There are a bunch of articles out there, but you can check them out in our Future of TV scan if you go to our website. Secondly, jumping on the Google bandwagon with everybody else, Google I/O today announced Android TV, right? And so this is not a set-top box, but an actual software platform that's going to be embedded onto smart TVs and OEM devices. And I think it's interesting for a couple reasons, right? The main one is going to be that it's a hybrid approach where you can actually stream content from your device as well as interface with the apps in the TVs like your Netflix, your Hulu. And I think that's important because we've seen with the Chromecast. The Chromecast is killing it. They're doing extremely well. And what they do is they let all the content sit on your device where you actually just put it up on the screen. You don't need to interface with anything clunky. You can just use it. It's quite simple, right? And so I think that's a huge selling point for consumers. And I think this Android TV might actually have a good chance with this new streaming content, this hybrid streaming, in-app usage, plus this gaming aspect that they're also trying to bring into play. I would also imagine they would learn from their first foray in 2010 with Google TV and have built a stronger app ecosystem. So I'm pretty optimistic. I want to watch and see where it goes, but I think this is going to be a good play for them. Hoping so.
Does it, Nathan? Does Android TV ultimately compete with Chromecast, or are they complementary? I read a great blog post by Fred Wilson this week about how Chromecast essentially flips the model for the future of TV, whereas everyone was coming out with boxes, whether it was Boxy or all the gaming consoles and so on, Roku. Chromecast says, hey, look, you've already got your devices. You got the mobile in your pocket. You've got your content providers. You go to their mobile app or their mobile site, and you just click to your Chromecast, and off you're running. No additional hardware or configuration needed. How exactly does Chromecast complement this new Android TV that's sort of the replacement of the old Google TV?
Sure, that's a good question. And so first of all, great minds think alike. I'm actually going to write an insight piece on that same blog article you mentioned. But what I think is, so Chromecast is just a streaming tool, right? Versus Android TV, this is going to be something that's embedded on the TV side. Now, I normally don't like smart TVs for that exact reason, because it's going to be up to the manufacturer to keep firmware updates up to date. There's really a disincentive almost for them to keep all this hardware, up to spec. But I think that with Android TV having those other complementary features, like I can use the Netflix app, I can use the Hulu app if I want, or I can use it as a gaming tool, right? I can use Android TV because it sits on a Roku box or it sits on an Asus box, right? I can use different features that aren't available with the Chromecast. So maybe we can see it as the Chromecast is the first step, and Android TV is naturally the next extension.
Got it. Makes sense.
Yep.
All right. Well, this brings to a close our 5th edition of the Venture Scanner Roundtable. As I mentioned earlier, we're excited to get our unbundled scans out there, and so I'm looking forward to all your feedback. Go to venturescanner.com. Simply click to subscribe to the sectors that interest you. Very frictionless. You'll have access to our dynamic landscapes, daily insights, and curated news, and obviously access to all the analysts that you have grown to know through this roundtable. You can reach me at nader@venturescanner.com with any questions or feedback, and we'll see you again next week. Have a good day.